Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 17th of April. Starting off with the FTSE 100, which was disappointing. That fall or decline from 8,000 plus. I suppose one could have guessed it, but obviously hit by geopolitical issues, which pushed it over. We broke back below the 78.80 level, and below that, we're really risking the 50-day moving average zone. 77.60. In the end, so far, we've actually bounced off 77.90, which was perhaps slightly above the 77, 80, 90 area we were fearing. On the upside, we want to see an end of day close back above 78.80 to give us the chance of a return to 8,000 plus, which now obviously seems rather a long way away, especially as it's the record high level. The other thing to watch, I suppose, is the RSI. We broke that that support line rather from back in January at the start of the week, and what the good news, I suppose, today is that we might be able to recover neutral 50 versus 49.5 by the end of play today. So best case scenario today is we close back above 78.80 and then resume the move within what looks actually to be a rising wedge, a negative pattern there since December rather than the rising trend channel we had before. Moving on to the DAX, and here it had fallen down to the 50-day line. That was one of the areas we were expecting or fearing in terms of the decline if we did actually break out of that rising trend channel from October, which I've kept on the chart there. 50-day line there around 17,700. Above that, looking for a well, hopefully a break of that resistance line there from the turn of the month around 18,000 later this week. Best case at the moment, I suppose, would be a retest of 18,500, the record levels by the end of this month, although it looks as though that may be asking for too much. On the downside, if we do break down, if there is a nightmare, then it would be filling the gap down to 17,200 from back in February. Next up is the Dow, and here the nightmare scenario here was that we would give back all our gains of 2024 to date, and so far the jury's still out. We've, I suppose, at this stage we've bouncing off the late January support around 37,800, but below that 37,000 beckons, and that is probably the worst we're expecting at the moment, given the way that the RSI is now at 32 and near. In fact, it has actually bounced off the oversold level. In terms of a rescue, 38,400, the March support and recent resistance would be the end of day close trigger for us to then head back to the highs and have another go at cracking 40,000. Moving on to Bitcoin, and here the picture is still a bit mixed. We're struggling to stay within that rising trend channel from October. The level there around 63,000. Below that, obviously, 60,000, and the level we're probably fearing is 57, 58,000 to stop out the people assuming that 60,000 is the support, and then the market would then rise after that. If you're looking for a direct rebound trigger, then it would be an end of day close back above the rising 50-day line. It's just above 67,000, but at the moment, the best probably we're looking for is a range between 60,000 and the all-time peak near 74,000, well, ahead of the halving later this month, which is probably imminent now. Moving on to gold, and here hopefully we were looking for a happy story. It's probably the best of the bunch in terms of the major markets that we look at. Rising trend channel, a sharp one there, sharply rising one from February. The floor of the channel there around 2360 now, and above that we're looking for the top of the channel, 2480, maybe as soon as the end of this month. Gold really looking good at the moment. On to crude oil, which obviously had the influence of the geopolitical issues, but surprisingly flat, really. We were looking for a push to the upside towards 90 and then $95, and maybe the news was suggesting that, but things seem to have died a death, and that broken resistance line there from last September now providing support for this market, and let's see if that continues to do that around the $83.50 area. Moving on to the stocks, and starting off with Aminex, which seems to be revitalizing itself at the moment. We already had the trend change signal there at the end of February, but it's taken a month plus for the situation to kick in. That was a bear trap gap reversal at the end of February, and that's obviously one of our favored technical setups or charting setups. Current situation is that above the 50-day line, 0.8, we are looking for the top of that broadening triangle from this time last year as high as 1.3 or 1.4 pence by the end of next month. It's a punchy call, but let's see if Aminex can do that. On to favourite, one of the punters' favourite, Barron Oil, which is slowly making its way to the upside, obviously slightly down today, but the overall position here is that we've broken above the 50-day line to 0.06 level, looking for the 200-day line at 0.08, and then best case by the end of next month up to 0.12 at the top of that broadening triangle from back in July. But decent effort here for the shares above that 50-day line, and that is the pivotal feature on the chart. Moving on to Bradda, where there has been a bit of a rebound today here on decent news, actually. So as the royalty payments coming in would be very decent news, but in the meantime we gapped through the 50-day line, now rising earlier this month, and we've gapped up again. So two gaps suggests that we're not looking at a fluke rebound. Gaps off the low normally very reliable, and 2.2 pence or 2.3 pence possible by the end of next month, while we remain above that 50-day line at 1.5 pence. So a reasonable risk-reward situation there. Interesting setup at the moment at Chill Brands, although it's down today. We hit our target there at the top of that rising trend channel base from back in January yesterday, which is always pleasing. End of day close about 3.6 pence, and we're looking to fill the gap up to 4.25. But what's interesting here is obviously the TR1 that came out the other day. Somebody taking a punt on that, which you would only do for one real reason, that you were expecting big sales figures, which so far I don't think we've actually had. Moving on to European metals, and here we've hit the top of our initial target there, around 17.75 pence at the top of that broadening triangle. Next level up was 22.75, which hopefully we'll hit by the end of this week. And if you're a fan of the shares and looking for even more, it's a cross or a tie-up between the 200-day line, which is up there at 28 pence, and the resistance line there from November at 33 pence. Hopefully that latter target could be hit by the end of next month, which would be quite a coup. But the upside value while we're above that 17 to 18 pence level. On to ECR, where we are making progress with that rising. Well, we've actually now got the 50 and 200-day lines both rising. If you look closely, I think that 200-day line is rising, and that suggests that we've got more momentum here. Hopefully we could get up to the old target there, 0.42, by the end of this month, and then best case would be up to 0.6 pence at the top of that broader rising trend channel from May last year by the end of May. So hopefully over the next 4 to 6 weeks. But the key here, staying above the 0.3 area in the 50-day line, and hopefully that would do the trick. Ideally also we stay above RSI 50, which we are doing at the moment, is 53. So hopefully the start of a decent move there. On to Genedrive, which we've covered several times in the recent past. Here we've had a bear trap gap reversal. We're holding above the top of the gap there, 4.5 pence, and above a now rising 50-day line. Looking for a retest of the 9.5 to 10 pence area, hopefully by the end of next month, or ideally even sooner, while we remain above the 5 pence zone. On to Petrel, and here the situation is one of hopeful recovery. The reason for saying that is the way that we bounced off this falling wedge there around 1.3 pence, and we're looking for the resistance line there from January, 2.15 pence, ideally by the end of this month. One of the more exciting stocks of the week so far has been Reabold, where it looks as though finally after an extended bear market we've got allegedly a seller out there. We've broken a resistance line there from November, around 7.5 and above 7.5, looking for up to 0.11 by the end of this month or even sooner. If you're a fan of the shares and looking for the best upside target here, it would be the line I'm drawing at the moment, which would be suggesting 0.15 pence by the end of next month. But hopefully we'll get through 0.1 pence by the end of this month. Ideally there's no break back below that November line, as I've suggested or implied. Next up is Synairgen, which I've covered many times as well, and here gap through the 50-day line, stayed above that 50-day line since then, looking for a retest of the 10 pence area, or maybe 11 pence by the end of next month or even sooner. Only back below that 50-day line and the gap delaying the upside. Next up is Tertiary Minerals, which is slowly getting there. Here we've had a gap fill signal there around the 0.1 pence level, and above that and above the now rising 200-day line. Very nice the way the shares have bounced off that 200-day line, or found support there at 10.5 for 4 consecutive sessions above that 200-day line. Looking for 0.17 now at the top of that broadening triangle from July, as soon as the end of next month, and maybe even by the end of this month. With that kind of chart, a gap close and the rising moving averages, that could be possible. Upland is next, and here you can see that we are making progress above a rising, or both rising 50 and 200-day moving averages. The RSI's bounced above that level, so initial target here 5 pence basically at the top of that rising trend channel from August, and then best case would be up to 6 pence by the end of next month, which should not far off the October peaks that we had. Finishing off with Union Jack, which is handing money back to shareholders, which is always a very friendly thing to do. Here we've just about touched that second target there, around 23.6, 23.7, I think the high today, around 23.5, so just shy of it, in fact. If you're a fan of the shares and looking for greater glory, then obviously the old June peak would be on tap. That was around the low 30s, but probably looking for 28 pence by the end of next month at the current rate of progress, and that's hopefully quite conservative. That's it for me today. More updates tomorrow.